Something unusual is happening in the silver market right now, and most people still haven't noticed it. Prices have been quietly climbing, investors are moving money into precious metals again, and some analysts are making a bold prediction that sounds almost unbelievable. They say silver could surge to $150 per ounce, not in the distant future, but possibly very soon. If that happens, it would be one of the biggest moves in the history of the silver market. The question is simple but powerful. Could silver really reach $150 in 2026? Or is this just another exaggerated prediction? In today's video on Silver Market Watch, we're going to explore the real forces behind the silver market, the data that analysts are watching, and the scenarios that could push silver to levels most investors never expected. Before we dive deeper, make sure you subscribe to Silver Market Watch and turn on notifications. This channel is dedicated to tracking the silver market, price predictions, and the economic trends that influence precious metals. If you're interested in smart investing and understanding where the market might go next, you're in the right place. Let's start with the current situation. Over the last few years, silver has been moving in cycles. Sometimes it rises quickly when economic uncertainty increases, and other times it stays quiet while investors focus on stocks or crypto. But right now, several global forces are beginning to push silver back into the spotlight. Inflation fears are still present. Central banks around the world are holding massive amounts of debt, and investors are once again looking for assets that can hold value during uncertain times. Silver has always had a unique position in the financial world. Unlike gold, which is mostly used as a store of value, silver has a dual role. It's both a precious metal and an industrial metal. That means it benefits from economic fear and technological growth at the same time. And this is where the story gets interesting. Industrial demand for silver is exploding. One of the biggest drivers is the global transition to renewable energy. Solar panels require significant amounts of silver to function efficiently, and as more countries push toward clean energy goals, demand for silver continues to increase. Electric vehicles, advanced electronics, and new battery technologies are also increasing the need for silver in manufacturing. Think about it for a moment. Every new solar farm, every electric vehicle, and every advanced electronic device adds more demand for silver. And demand is only one side of the equation. The other side is supply. Mining companies are not increasing silver production as quickly as demand is rising. Many silver mines are actually byproducts of other mining operations like copper or gold. That means production doesn't always respond directly to higher silver prices. In some regions, mining costs are also rising due to energy prices, labor expenses, and environmental regulations. All of this creates pressure on the supply side of the market. When demand rises faster than supply, prices usually follow. But could that really push silver all the way to $150? To answer that, we need to look at history. Silver has experienced dramatic price spikes before. In 1980, silver briefly surged close to $50 per ounce during a historic market squeeze. Then again in 2011, during the aftermath of the global financial crisis, silver almost touched $50 once more. Now imagine something similar happening again, but in a world with far greater industrial demand and far more money circulating in the global financial system. Some analysts argue that if silver simply adjusted for inflation from its 1980 peak, the price today could already be much higher than what we see on the charts. Others believe that a major supply shortage combined with economic uncertainty could trigger a powerful rally. There's also another factor that many investors are watching closely: the gold-to-silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 40 to 60 over long periods of time. But in recent years, it has often moved much higher, sometimes reaching 80 or even 90. When the ratio becomes very high, it often suggests that silver may be undervalued compared to gold. If the ratio starts moving back toward historical levels, silver prices could rise much faster than gold. Let's imagine a scenario. If gold were to reach $3,000 or even $4,000 during a major economic shift, and the gold-to-silver ratio dropped closer to historical norms, silver prices could potentially climb into the triple-digit range. That's one of the reasons some analysts talk about the possibility of $100 or even $150 silver. But of course, not everyone agrees with that prediction. Some experts believe silver will rise gradually but remain below $100 for several years. They argue that market speculation often creates unrealistic expectations, and that large price targets can take decades to materialize. So, who is right? The truth is that no one can predict the exact future of the market, but we can analyze the forces that influence it. One major factor is investor psychology. When investors start believing that silver could rise dramatically, momentum can build quickly. Retail investors, institutional funds, and even hedge funds may begin accumulating silver assets. That kind of momentum can accelerate price movements far faster than most people expect. Another factor is global economic instability. If the US dollar weakens significantly, or if inflation accelerates again, precious metals often become more attractive as a hedge. During periods of financial uncertainty, investors tend to move away from risk assets and toward tangible stores of value like gold and silver. At the same time, technology continues to increase silver's industrial importance. The world is becoming more electrified, more digital, and more dependent on advanced manufacturing. Silver plays a crucial role in many of those technologies. This combination of industrial demand and financial demand is what makes silver such a fascinating market to watch. But here's the part that many people overlook. Silver markets are relatively small compared to other financial markets. That means when large amounts of investment money begin flowing into silver, prices can move extremely quickly. In other words, the upside potential can sometimes surprise even experienced investors. Still, reaching $150 will likely require several major events happening at the same time. Strong industrial demand, limited mining supply, investor momentum, and a supportive macroeconomic environment would all need to align. If those conditions appear together, the silver market could enter a powerful bull cycle. And that's why many investors are watching 2026 so closely. Some believe the next few years could mark the beginning of a long-term shift in the precious metals market. Whether silver reaches $50, $100, or even $150, one thing is certain: the silver market is becoming increasingly important in both the financial and industrial world. Now we want to hear from you. Do you think silver could actually reach $150 per ounce? Or do you believe that prediction is too optimistic? Share your opinion in the comments below. Your insights and perspectives help create a stronger community of investors here on Silver Market Watch. And if you found this analysis interesting, don't forget to like the video and share it with someone who follows the precious metals market. It really helps the channel grow and allows us to keep bringing you deeper insights about the future of silver. Thanks for watching. Stay curious, stay informed, and we'll see you in the next video.